Why are you echoing now?
Shit.
You straight?
Yeah, testing. I'm good. It should be live in the group now. Let me check the group. You know, it don't even matter your age. Don't even matter your color. You gotta have it, y'all. This is for everybody like that. Just listen to what I'm saying and do. I put my hand up on your hip. When I dip, you dip, we dip. You put your hand up on my hip. When you dip, I dip, we dip. I put my hand up on your hip. When I dip, you dip, we dip. You put your hand up on mine. We can dip alone and roll and grind. You don't flow like I said before. You're right down there. Just put it there. Roll those hips with it. Pop it, push it, rock it, roll it, take it, drill it. I can hold it. Just all in front, so take a chance. Just get on the floor and get on.
Yo.
I know you like yo. Turn around. See you from the back. Yeah, I like it like that. Yeah,
Hey, go get the pussy rolling over that joint now.
Hey, Rex, you ever heard this song before?
This one, man, I definitely know this one. Last week I caught me off guard. I was like, man, this is a little before my time, but
it was the 80s. Yeah, this one came out in the mid-90s.
Like yeah, they was playing this when I was a kid, and they were still playing it even when I was in college. So.
Hey, you live in the group?
Yeah.
Or you live on your page?
Oh shit! No, it should be in the
You ain't live in the group yet, dog.
You sure?
Let me see. There you go.
You see it?
Yeah, I see it.
Hey, tag me in that joint because I can never find it every time it's kind of weird.
Tag you?
Yeah, because I can never show up on your feed.
All right, hold on. Hey, you don't drink beer, do you?
No.
Really, John.
Body like Bart Simpson or something. What the hell you got on his head?
Motherfucking sour beer.
Oh, Ed just left the group or the room somehow. Man.
Y'all know the song. So come on, won't you sing it? Put my hand up on your hip. When I dip, you dip, we dip.
Nah, we're live in the group. I see us now.
Yeah, I see it. What's been good with you, Rex?
Man, nothing. If I could go back in time though, I would have took my money from the Santa Claus rally and just chilled until March. Man.
Last week was brutal, man. Last week was brutal.
And it's crazy because, all the information is there. All the data tells you. Yeah, all the data tells you February is terrible. You know what I'm saying?
Yeah.
And then try to beat the market. It ain't happen. So, but that's option trading. So just trying to bounce back. Got a lot of money tied up in crypto, but
Oh, you start doing crypto, Rex?
I mean, in crypto sympathy stocks. I didn't buy like Bitcoin directly. I got like $200 in Bitcoin that I just leave alone, but I don't like trade actively.
Yeah, I got a couple hundred in Cardano and a couple hundred in Ethereum.
Yeah, I put like 50 in Ethereum and then Litecoin.
So I just put my name on the waiting list to get on, get in the ability to stake Ethereum too.
What does that mean? Like you can like mine for it?
So it's kind of similar to mining, but they use the coins that you have sitting in your wallet on Coinbase to do what? I'm not 100% sure on, but it's kind of like mining. So instead of using equipment in your home, they're just doing whatever they need to do with the coins that you have in your wallet.
Interesting. They're probably using it as part of their algorithm.
And they said that you can possibly get up to 7.5% in return if you allow them to use the coins that you have in your wallet to stake.
Actually, always something we have to research moving forward.
Yeah.
But yeah, man. Yeah, start us off, bro.
You got the link? You got the YouTube link? Yeah, Ed?
No, I'm trying to get that joint now. Hold on. I need an intern. God damn. Can't give me a link to it.
How many screens you got up in your room? Ed? What you got, about three screens?
Yeah, 2 monitors in the laptop.
We got a couple people in the group.
Let me get that link. Have y'all done y'all taxes yet?
Yep.
Nah, I was holding off because I remember when you said don't file it until the stimulus come out. So that's what I was waiting on.
Oh yeah, if you're gonna that's true.
I usually file my taxes last minute anyway, but I do know I got the April date in my head that I got to pay my capital gains no matter what happens.
Are you making more this year or last year?
I'm making more this year
Because
all the money from trading last year is getting counted with my wages. I made more money trading than at my job last year.
Damn, for real?
Mm-hmm.
Because Rex wasn't playing, huh?
Man, options is crazy, bro.
Options, man.
But yeah, January and February have not been so giving. So, I'm just trying to keep enough money so when everything drops, I can buy back in and then hopefully bounce back.
Mm-hmm.
When did you start doing option trading last year?
I was trading I wish I had known about options in March, but I was just buying and trading in March. Probably, let me look at my Robinhood real quick.
Hold up, bro. You just started trading options? You ain't been doing this for years?
No, bro. I started 2020. I've been trading stocks. I started trading stocks 2013 to 2015. That's how me and Quay got on, and I used that money to start flipping houses. So that's what I did 2015. 2015 came. I had my daughter. I started trading as much. I was focused on real estate, and then I wasn't really into it. Pandemic came, and I was like, I'm at home, got all this free time. I remember how to trade. I know more than I did back then.
Yeah.
So I got back into it, and then looking at what Robinhood got to say. So that was March when I got back into it, and then
that's when you hopped in options.
And options, I hopped in June of last year.
For real?
Yeah.
I thought you've been doing options for a couple years.
Bro, no, because I swear you already told me about June.
Nah. June is when I made that UVXY play.
Oh, okay.
Yeah, that's why I went back, because that's when I started trading. That was the first time my account broke into day trader status, and that was June 15th.
Mm. Yeah, I thought Rex was doing that joint since 2017. So.
Nah, man. Because that was when Moderna and all that was booming, and I was like, Ed. I feel like, Walmart was like my first joint. I think Walmart, and then I did a put on whatever biotech you had. I was like, look, Ed, these joints not gonna go up. I'm gonna place a put just to show you, and that joint like doubled same day. It was like
Moderna, right?
It was Moderna, yeah.
The first one, that joint went up like. I wish I did options back then, because that joint went up like 3 times, like from $20 to like $70.
Mm-hmm.
I would have made a killing with an option.
Had no idea. I would have been like that dude who was buying Tesla joints for 10 cents. Just let them joints ride out.
He made a killing, huh?
I forgot Ed posted. It was like he put up like $2,000 for 10-cent $1,000 option contracts or something. Like when everything dropped in March, and he still did. I don't know if he sold it yet because when Ed posted it like in December, he still had not sold. But I think it was a January expiration, and the joint had gone up to like $250,000. Hey, you remember the joint? You the one who posted it. I know you remember.
Yeah.
About Tesla?
Like, yeah, it was a Tesla. You like, this is what discipline looks like. And I was like, couldn't be me. That's when we went to 600. I'm like, sold.
He was still holding that joint. I said, what make you hold for that long?
Hey, look, I guess because we ain't got no special guests, don't nobody want to hear what we got to say, huh?
No, there's something wrong. I don't think that joint getting broadcasted because I couldn't even see it.
I see the notification.
It's in the group.
Yeah, it says 10 minutes ago, Ed.
Who's Satan Wilson? Then they talking to you, Chad. Coach Chad. That's one of your students.
No, that's my cousin.
Oh, okay.
That's from that last one from last week.
Yeah.
That's my cousin. Hey.
No. It's from right now.
Oh, is it?
I'm in the YouTube joint.
That's my cousin Santon.
Yeah. He said, let's hit the icebox. They played some Northeast Groove.
Hey, my cousin right there, that's prime example that somebody that's really, really interested in getting into investing, but it's teetering on the fence.
Right. Yeah.
Prime example.
Yeah.
Well, now it's a good time to get in. February is behind us. March right around the corner. So everything that was going to happen probably already happened. Should be up for the next 2 months.
What you got this week, Ed?
I was about to put up the earnings for this week. See what y'all interested in.
I thought you hit Tim up. He not hopping in because I know you asked for Tim's pick or he working.
Yeah, I just texted him see if he getting on. He ain't hit me back yet.
Yeah, he sent the picks in. He sent this picks in. I don't know if he coming there. I sent it on to Randy. He ain't hear back from him. What y'all looking at? They got Neo. I might do something with Neo. Neo Zoom.
I be doubting Neo, but Neo be proving me wrong. So,
matter of fact, I need to go to that tip ranks to see how they did their last. How they do their last joint.
Let me pull it up.
There was a guy on you see that little box up there, Ed? Can you get that over there?
What box?
You see that little edit box?
Let me see. Over here?
Nah, right there by purple. You see it? Nah, it's on the earnings joint. You ain't got to move.
Oh shit. Over that.
Now, the only reason I asked you to move so people can see that company Splunk. There was a guy on YouTube that I just watched a little video on. For some reason, he was real high up on it, man. I looked it up and the chart, all that chart, their stock price has just been going down and down for the past couple of years.
Who? Splunk?
For Splunk.
It's on Friday?
Nah, Thursday. You don't see that edit box right there?
Well, go up or down.
Click the add text right above purple and BJ's. Go down a little bit with your cursor.
Oh, purple. Okay.
Yeah, right there. You don't see that text box?
Oh yeah, how you get this shit out the way? God, damn.
But yeah, I just got up on tip ranks. Neo's actually dropped after every single earnings.
For real?
Yeah, but it's weird because I definitely remember losing on a put before. So I think they've got their implied volatility is probably really funky. That's what it is. I definitely lost in the put on Neo before.
I ain't messing with Neo.
Oh, that was my question last week. Why do y'all think even when sometimes when the stock goes down, the put will go down also?
I think big money is starting to. I feel like maybe a year ago, right? Maybe like 5% of the market did option trading. I think now that people are getting more comfortable with trading, everybody trying to get into option trading, and it's probably like 15% of the market's trying to do it. So the same way they was like gaming pre-market and taking advantage of retail investors, I'm starting to think like they're doing the same thing with options, because even when I'm looking at companies that aren't really trending, the implied volatility be like 100%, 200%, 300%. I'm like, why is it so high? So I don't know. I'm starting to feel like the safest way to do option trading is to be the person selling the calls into the high implied volatility and then just seeing what happens.
Oh yeah, that was the joint I wanted to go over. Selling the call. Let's use one of your examples.
Yeah, definitely. That's 100% where my mind is at now, because like if everything I'm looking at, the implied volatility is sitting at 100 to 300%, when you're used to seeing maybe 40 to 80%, it means that the calls are worth more than they should be. So rather than trying to time it right, you can buy what we got here. Let's grab Neo. Neo might be a little steep for people.
Hey, do me a favor, go back up a little bit.
Oh, here you go. Yeah.
On May 2018, they went down 17%.
They've never gone up after earnings. Yeah.
Hold on. Why does this look different? Normally it's like red. It have like a color.
Oh, scroll down a little bit more. A little bit more. I think that's just the earnings per share. The price after earnings is a little further down.
Well, how do you know if? I think this is saying that they didn't. This is saying that they didn't have a forecast, so you don't know if it beat earnings. It really didn't beat earnings, or you know what I'm saying? They didn't have a forecast, I guess, because it's China.
Nobody cared. Yeah.
Yeah, so you don't really know if it, you know what I'm saying, beat earnings or not, but you can see what, like you said, what it did after earnings. So both times the last year it went down. Damn, it went down.
They've never risen after earnings.
Oh, they was only $2.90 back in March.
Yeah.
Crazy.
You would have had a come up if you was on Neo back then.
But yeah, I mean, y'all want me to explain the sell the calls, or we want to cover something else first?
No, you can go ahead and go into it.
All right. And I want to do that sell. I want to go over the selling an option.
Yeah, that's the same thing. So
okay, I'll go ahead. Yeah.
Y'all got a cheap stock we want to do, because I feel like no one's gonna really drop 4,000, on their first try. So let's do AT&T. AT&T is a good stock. They pay dividends, so holding the stock doesn't really hurt you. All right. So as we all know, if you're buying a call, you're buying the right to purchase a stock at a certain price, no matter how high it goes. And if you're buying a put, you're buying the right to sell a stock at a certain price, no matter how low it goes. Its base function is to operate as insurance for stocks. So I'm a billionaire investor and I bought 1 million shares of Apple. So I have $125 million vested in Apple. I buy option contracts that say no matter how high, and I want to buy more shares. No matter how high Apple goes, I get to buy it at this certain price. It's my insurance that I'm going to get to buy Apple at $130, even if it shoots up to $200 in December, because I have all this faith in the stock. And conversely, for the put, the insurance is I own 1 million shares of Apple. I have 125 million vested, and Apple tanks because we have a second, March crash. My put's guarantee that no matter how bad things get, let's say Apple goes to $1, my put for $100 says I still get to sell it at that $100 price point, no matter how low it goes. So that's actually what options are meant to do. So if you would like to sell these contracts that we in this group, for the most part, have been selling and trading for profit, what you would need to do is own 100 shares of any individual security that has options, because not every company or security has options. For example, I was securing shares of ZOM only to find out they don't have options. So I reduced my position and changed my strategy. But for, let's say, AT&T, which is still a little steep, but we'll go with AT&T, it's $27.89 right now. So let's just say it's $28 to buy one share of AT&T. If you were to buy 100 shares of AT&T, that would require you to put up $2,800. So $2,800. You buy the $2,800 of AT&T. Those are your stocks. You own them. That's it. If you don't sell them, no capital gains, nothing. It's your stock that you own sitting in your portfolio like any other time. Except because you own 100 shares, if you go into the same trade options section in your Robinhood or your brokerage account that you've been using thus far, you should see an option to you get a call or a put, or buy or sell a call or a put. All this time we've been using the buy option and toggling between call or put. If you shift over to the sell option, you now can toggle still between call and put. But if you go to sell and call, to sell a call, if you have 100 shares, you will have the right to generate or write a contract for those underlying AT&T stocks that you own. So in this example, we bought AT&T, again, for simplicity, at $28. Let's say AT&T is slowly going up $1 every week. So next week, it'll be 29. And then in the Ides of March, on March 15th, it'll be $30. You could look at the contracts being sold already and go, oh man, this implied volatility is really high. Implied volatility is telling you these contracts might be selling for more than they're worth. That's not good for the person who's buying the contracts, which is why a lot of us might have felt like you got burned over the last month in February. But if you are selling the contract, if you are selling a written call contract into high implied volatility, it means you're getting paid potentially more for your contract than it's actually worth. So that's being on the winning side of things. So what you could do is, if you own these 100 shares of AT&T, and you know about out the money, in the money contracts, you would want to sell an out the money contract. If you sell an in the money contract, literally as soon as that contract is sold, the person who has it, we don't exercise contracts, but you never know. The person who does buy your contract could choose to exercise it instantly if it's in the money, at the money or in the money. If you're selling a contract at the money or in the money, the person you sell your contract to can exercise it immediately. They do not need to wait until expiration. So in what we're trying to do, you're trying to profit.
Hold up, Rex. No, I don't think you sure it works. I don't think it's the individual. I think it's the same way where it's not linked to one person. So if I sell,
it's not linked to one. Yeah, you're selling it into the ether, but whoever buys it in the ether can choose if it's at the money or in the money to exercise it immediately. They do not need to wait. The same way when you buy a contract and it says exercise, but we never exercise them because we don't see the benefit in it. It might not get exercised. I'm saying that if you write a contract at the money or in it, it can be exercised immediately.
But what I'm saying is, I don't think it's not going to affect me.
It will affect you because your 100 shares will be called away.
That's what I'm saying. I don't think it's. I gotta look that up because I don't think it's like if I sell my 100 shares and I got mine 100 shares, as long as I have it on collateral, whatever, and let's say you bought it.
Okay.
We're not. You're not linked to mine. Like you can sell yours, but it's not going to affect mine. I can. You know what I'm saying? I can sell it. I can buy it back whenever I want to buy it back. It's not linked to you.
It's the contract. You don't know who gets your contract, but if I happen to have your contract, or some random person in Paris or Ethiopia or Brazil happens to have your contract, and they exercise it, it's your 100 shares that are called away.
You sure?
Yes.
Okay.
Because you got to remember the contract is very specific.
Who else would it be if you're selling it?
No, because it's like the same way. Because I know when people do that, I I can sell my contract. I can buy my contract back at any time. So it's not buying it back from him. So it's never linked to that person. They just bought it, like somebody just bought it at that point.
So when let's say you're trading contracts in let's say Tesla. When
no, keep
AT&T. Okay. Yeah. So and in the same day, let's say in the same day, I'm now buying contracts. I'd never owned 100 shares of AT&T. I bought a call option for $28 and I got 10% profit and I sold it. And then later that day, the price went down and I bought another call. Those are two separate contracts, two separate individuals.
Yeah.
They have nothing to do with each other.
Right. No. That's what I'm saying. Let's say I got I'm trying to sell my call, right? AT&T. I put 2,800, I bought 100 shares. And I did a sell, somebody buys it. Right? Let's say the joint go, my premium, I get the premium money. So let's say
up front, correct.
Let's say the premium, let's say the stock goes down and the premium goes down. I can sell my premium back at any time.
The premium goes directly into your pocket. It goes immediately.
Right, but if the premium goes up or down, I'm not.
It doesn't impact you. It only impacts the person you sold it to.
Right.
Their money's going up and down. You collected your premium because you wrote the contract. So let's say that I bought 100 shares of AT&T at $28, and I sold it out of the money contract for $30 for this Friday. So March 5th, AT&T, $30. And let's just say I sold it. It was $100 premium. As soon as I wrote that contract and was accepted, $100 went into my account. That's it. I'm now separate from that contract. Everything that's happening after I originated the contract, that up and down, is the changing of hands between whoever's going to wind up with the hot potato or be left with my contract when it expires. And that person and I will deal with each other, not directly.
No. Stop. I got it up to that point. What I'm saying is, you're not obligated to wait to see what they do. You don't have to wait till your expiration. I can sell it back at any time. That's the part I think you're not getting.
What do you mean sell it back?
If
you sold your
they've exercised.
What'd you say?
They've exercised.
What I'm saying is, okay. Let's say I do a March 5th one, right?
Okay.
I sold a March 5th one. And let's say whoever buys, let's say you bought it. It don't matter. Like you said, somebody buys it, and I get my $100 in my account. I don't have to wait till March 5th. I can buy my contract back at any time. I'm not waiting on you or whoever has the contract to do it. Like, I think you think it's not linked to that person. It's just like when you're buying a contract. I can sell it at any time. If the premium goes down, I can sell the premium. I can sell the premium back and just take whatever the winnings were.
So you're talking about selling the close?
No, I'm saying I can sell at any time. I can buy my thing back at any time. I can buy back the
contract.
Yeah, the contract anytime. I don't have to wait for that particular person. It's not linked to the person.
You can do that, but as soon as you write your contract, if it is at the money or in the money, they can exercise it. And they exercise it before you buy the contract back. You wrote a contract. Your 100 shares are gone.
No, I don't think it's like. I think if.
What do you think the call option contract is for? Whose 100 shares should they be getting?
No, if you wait to the end, when it gets exercised, you have to do it. But it's not linked to that person who has your contract.
But they don't have to wait to the end to exercise.
They don't have to.
Right. What I'm saying is, if a person exercises, no, I don't have to give them my shares.
You do.
You do.
That's why it's a contract for your 100 shares that are on collateral.
If you didn't have to give them your shares, that means you could keep your shares and keep doing that shit over and over and over and over again. Like people do
that. They're literally called collateral. So what do you think their function is in that contract?
No, because when it's collateral, your premium will go up or down. I'm saying the premium will go up or down, right?
Yeah.
But the premium goes up or down. I can sell my premium at any time.
That's different from exercising.
Right, but if a person exercises, I don't think we're.
Hey, no, keep going. You was about to say it. when you exercise your shares.
No, at the end. No. No, what I'm saying is only when it expires, like expiration.
No, you can exercise your contract as soon as it's in the money. As soon as it's in the money.
No. Make sure we saying the same thing. I understand. Let's say you got my contract, or you know what I'm saying, whoever, you got it, and you exercise it. I'm saying it's not going to affect me personally. That's what I'm saying.
It will. Your 100 shares, Ed, will be called away. That's literally what it means. Your 100 shares that were collateral for that contract will be called away from selling a call contract. I know you've heard that before. Shares been called away. So what you want to happen, the reason you don't sell at the money or in the money is because you don't want to have that in the back of your mind that my shares could be called away at any time. You sell it out of the money because you know your shares cannot be called away until it hits that strike, right?
Yeah, I got that. But I thought you wasn't on. So how do you know who has your contract?
You don't. It just gets called away into the ether because you wrote the contract. Your broker handles all that.
Right. So if a person says they want to exercise their contract, how do you know? How is it linked to you if you don't even know who the person is?
Because you wrote the contract. Your broker knows whose 100 shares are the collateral for that contract.
No, I don't think that's right. No, there's no way. No.
All right, so Ed, let's say
it makes sense. Like so you saying you got to trust Robinhood that there's some random person that you don't know exercise the contract and you got to sell it.
Yeah.
No, it doesn't work like that.
No. They were literally Ed, I think what's scaring you is you think your shares just disappeared. You're still paid for your shares.
I understand that part. I understand exactly how that works. I'm saying it's not linked to a person. I'm saying you only have to give up your shares if it's an expiration. That's what I'm saying. An expiration when it expires. There's so many other. It's not linked to you no more. Oh, hold on, man. I hope my man pick up. My man do shit. He do it every week.
Next time you speak to him, ask him what it means to have your shares called away and when can your shares be called away. That's all you need to know from him, and you'll see whether or not you understand what's happening.
Hey, real quick. Hey, real quick. Huh? You sure you streaming right in the group, dog?
Yeah, because nobody's in there.
I mean, people are in there, but like normally a lot more people be commenting and stuff.
I think it's that stream. Like, hold on.
So while you looking at that, while you're looking at that, hey, real quick.
I'm gonna ask my man right here because he do it every week. Hey, Joe. All right, go ahead. Joe. A quick question on when you do your call, when you sell the option. If a person executes their exercises beforehand, before the expiration, do you have to sell your options?
Your shares?
Your shares? You don't have to have shares to sell options. Right. No. If you're doing a covered call, is it linked to a person? Oh, if you're doing a covered call, so you got like at least 100 shares to sell one contract, and it's in the money and they exercise it. Yeah. You have to sell your 100 shares. Yeah. I mean, that would be the best bet because you already got the shares at a lower price, so you would basically lose your profit that you had in it. You would sell them, or you could that'd be the best. No. I ain't saying that's the best bet. I'm saying if a person on the other end who bought the contract, if they wanted to exercise it early, do I have to give them my shares?
The way you should phrase it is ask them, can my shares be called away before expiration?
Yeah. Can my shares be called away before expiration? Yes, if it's in the money, if the option is in the money.
Go on, Ed.
The person that has it. How do you know who has your contract?
That's a broker's job, Ed.
So say you got a contract that expires like April 1st, say April whatever. Right. March 5th, March 12th. March 12th is a Friday. So say you sold a call that expired March 12th, and say if it's like the stock is at like $40 and the option is $50 call. Right. And
say the stock jumps this week like $20 and it goes to, say it goes to 50, 55 by Wednesday, right?
Right.
You sell it tomorrow.
Right.
By Wednesday it goes to 55, so it's $5 in the money. They can actually, once it's in the money by $1, they can exercise it right there. So they can exercise it on Wednesday, right there, before the expiration date until the 12th, but they can exercise it on Wednesday.
But it's gonna take my shares?
Yes.
So
Man, you breaking up. No, is it gonna take my shares? Huh?
you would take your shares, your 300 shares. You would sell your shares because that'd be the best. That's the best way to do it because you're not gonna go buy 300 shares. Say if you sold 3 contracts with 300 shares, you're not gonna go buy 300 shares because the price is gonna be higher at that point in time.
No. You're missing my question though. Is it gonna force me to sell? Is it gonna force me to sell my shares? You saying like if they want to buy it, like do I have a choice or are they gonna take those 100 shares from me?
I don't want to have a choice because you would want to sell. Yeah, they would most likely do that. I never been in that position.
So you're not sure?
He gave you your answer already. You just trying to get it worded differently. Your shares will be called away.
No, listen what I'm saying, Joe. That same example. No, listen. But shoot, I want some time. Like if it's still a week to go down, I might think it's gonna go down.
That has nothing to do with you.
Has nothing to do with that. They have the legal right to purchase your stock at the agreed upon price.
Go ahead.
As long as it's in the money.
Go ahead.
I'll hit you back, yo.
All right. Now that we know that Ed was wrong, we can get back into explaining the strategy.
Okay. I don't think, man. Huh? No, I gotta look that up. You said you never done it. I need somebody else. I need an expert.
He said it never happened to him because he doesn't sell in the money contracts to avoid that happening to him.
Oh, okay. All right. I hit you back, Joe.
Hey, change the screen, dog.
Yeah.
No, I'm staying, but how would you know who's the person?
It doesn't. You don't have to. That is the broker's job. Your broker. That's your broker's job. They know that the contract has been executed, so they must go get the shares that were used as collateral to create that contract, give them to the person who now has the legal right to purchase them at the strike price, put the money for that strike price for the 100 shares in your account, and then settle all books. That's the broker's job. But you're legally obligated to, because you wrote a contract for that strike price at any time between when it was written and the expiration. We just choose to not expire because we don't see it being profitable. You could write it in the money contract and a person still not execute it. What I'm saying is, for the strategy that I'm exploring now, building into implied volatility, you want to avoid that so that you get to keep your 100 shares and do it again the next week. Because if your shares get called away, you got to go buy a new 100 shares and then write a contract, as opposed to collecting the premium, it expiring out of the money. You keep your 100 shares that were used as collateral because the contract never met its parameters. And then the next week, writing another new out of the money contract, collecting a premium and doing it again. Does that make sense?
Yeah.
All right. So I have a question now. So I got all of that, right? What I'm not clear on is who's responsible for paying for the profit.
The premium comes out of the option trader's pocket, us. So what we're doing right now, right? We're like, I think Apple's gonna.
No. When I sell it, so I sell that put, right?
A call. You sell your call.
I sell my call. Let's just take that screenshot of the young lady that killed on that GameStop call.
Mm-hmm.
She bought it low. It was like $50.
Mm-hmm.
Jumped all the way up to 8,000. Mm-hmm. Who's responsible for paying her that 7,000?
Got you.
Nobody's paying that. Go ahead, right?
Yeah. Think of it like this: when Nike sells Jordans, that's it. They collected their $200 for the Jordans. If those Jordans are $5,000 next year and $10,000 a year after that, that has nothing to do with Nike. Nike, who originated the contract or originated the product. That is an aftermarket sale. So that money is coming from the changing of hands between aftermarket or buyers after its origination. Does that make sense? So that money came from another options trader who was trying to who purchased it thinking they were going to make more money.
So when they go to close that close, it has nothing to do with me.
Nothing to do with you. The only thing that has to do with you is, let's say she made $8,000, right? But then GameStop also, when you wrote the contract, GameStop was $50, and when it gets executed at $500, the only thing that has to do with you is that when your shares are called away, they're called away at your strike price. So if you wrote a out the money contract for $100, they will take your 100 shares. They will give you $100 for each share, so you'll get $10,000. They will immediately own 100 shares of GameStop at $100 cost average. And if GameStop is $500, they will immediately have $40,000 of profit, of unrealized profit in their portfolio. They could then choose to realize by selling the 100 shares they took from you at the previously agreed upon price.
All right. So put it in plain.
Look, in short,
all you're doing is getting the premium.
No. All you're really doing is the person in your example that you said, the lady would get 100 shares of GameStop.
I ain't worried about her. All I'm worried about is my responsibility.
Right. No, all you're going to do is give up your 100 shares.
That's right. It. That's all you have to do.
You give up 100 shares, so you're going to be down. You don't have to pay no money, but you giving her 100 shares at like whatever the strike price, $20, when now it's worth like $500, for example. So you're going to be messed up like, damn, this shit worth $10,000. I had to give her, you know what I'm saying?
Yeah.
Like basically you're giving up your 100 shares at that set price.
So the only thing you lose is unrealized profit. That's all you lose, unrealized profit. But you get your money for your shares, the agreed upon strike.
Gotcha.
You want to write a strike that you're comfortable with. Like, hey, you know, if my GameStop shares that I bought for $25 sell for $30, I'm happy with that. If you're at peace with it, then you win. You know, no matter how high it goes.
I got you.
Nah.
Now the only thing I don't really like about selling the shares, you're not really gonna make no money. Like if you use this example that you said, let's say you put up $2,800 for 100 shares, right?
Can you bring up an example? Hey, can you do a
right here? Yeah, I got it right here. A buy put for AT&T right here.
Oh, you want to sell a call? Sell a call.
Yeah, I got it on. Oh, sell it. Okay, my bad.
Yeah.
I want to sell a call, right?
Let me pull it up on my phone so I can track with you.
So now I've been put up $2,800, and then a call just to make $66. Like if these joints expire, like if I do a $30 call, that shit like $3. You ain't gonna really make no money on them joints. You know what I'm saying?
Yeah. It's not a lot, but at the same time, right? When you go into that $30 contract for AT&T and you start looking at the Greeks, what's that implied volatility? 32%. I'm saying my new strategy is, instead of trying to profit off of these contracts that have implied volatility of 300%, because remember that percent is telling you this contract is probably being sold for more than it's worth. That is bad for the seller. It's bad for the buyer. It's great for the seller. So since, you know, I spent a month being the seller into being the buyer in high implied volatility, I want to shift my position in that exchange and be the seller into high implied volatility. We use the AT&T because it's cheap, but you want to do like SNDL, right? Like Sundial. You do Sundial, you buy 100 shares for $100. Let's hop over there real quick.
The point is, it's gonna be the same. It's gonna be the same result. You spending almost.
No, because Sundial has a very high implied volatility, so that contract is being sold for more than it's worth. It's still not going to be as much as you'd make from option trading. What I'm saying is, if it's consistent income coming in every week, it's less risky, and now you have like a steady flow of income you can use to either keep buying the shares of the company. Like I used AT&T because they have a dividend. You really want to do this with something that has a dividend, so that holding the shares benefits you even further. But let's say, you know, Sundial, buy 100 shares, cost you $135.
Which one? Which one are you looking at?
No, I'm just saying, if you buy SNDL right now, it costs you $135 to buy 100 shares of SNDL. You could sell a $2 contract for $8, or you could sell a 1.5 contract for $13, right? That doesn't seem like a lot, but that's a 10% return on your money. So you scale that up, a 10% return every week. What did we learn at the beginning of this year when we did the breakdown? A 2% win every day puts you at 6 figures. So if you're making 10% every week, you know,
what was the one we just did? That was like 2,800, and then to make how much?
It was like $13. You know what I'm saying? Because the implied volatility is 32%.
Yeah, okay. Yeah,
but you see, for Sundial, the implied volatility is 262%. Again, remember, that means this contract is being sold for potentially more than it's worth. So sucks for the buyer, great for the seller. So you want to be the seller when you see those crazy IVs.
Hey, does Robinhood give you a percentage of probability, or how if they was gonna if that option?
That's Webull.
Which is that? That's Webull. Yeah.
Webull does it. I never seen it on Webull.
When you buy an option contract in Webull, it'll show you the probabilities.
Okay.
All right. Yeah.
So this is gonna be a new strategy. I can't live with 10%, man.
I'm just saying, like when you get to a certain point, right? Like you can't, like, let's say you got a 6-figure portfolio. Yeah. You can't keep risking tens of thousands of dollars every week. But like, what if you just bought a share that had, you bought $10,000 worth of something? You getting a dividend return on it every quarter, and you're also making 10% on that investment every week. That's what me and Kevin was talking about. Because like, it gets scary. You're like, man, I've made this money. I would like to keep this money. Yeah. How can I safely continue to trade it? Yeah.
No, but my boy I just called. He's not even on social media, but he does Tesla joints every week. You know what I'm saying? But he does the. I guess he got the level 3 where you do a naked call, so you don't even have to have the shares. You know what I'm saying?
How you get qualified for that? No, he never qualified me for that.
He's been doing this things for years.
Okay.
Years, and I think he got money. He got enough money in that joint, so he do Tesla joints he make like a few hundred every week. You know what I'm saying? Like he said, he just do like every week. He'll just do one that he knows is not gonna go in the money.
Hey, would y'all consider that passive income?
I mean, it's not passive because you kind of, stock trading, we all know it'll wake you up some nights. You should be up at 4 a.m. Let me check the pre-market. All right. But yeah, I mean, like, Tesla's one of those high IV stocks. So, like, you can literally sell a $1,000 call every week. And the thing about the call options, right? You don't have to sell it on Monday. If you want to, like, guarantee your income, you could sell crazy out the money contracts every Thursday night.
Yeah, like he did, like if you did a Tesla one, if you did one with like $7, like $100 up, it probably won't hit it, but you never know. Tesla could hit it.
Yeah, Tesla. Yeah.
That's why I told him, like, man, if it hits it, he's gonna be short because he got to buy those 100 shares.
Yeah. Oh, I mean, that's it. I mean, I think a real good strategy for them big stocks like that. If I had 100 shares of Tesla, every Thursday I would just do an out the money contract. And then Friday, I mean, even if Tesla's not gonna hit, you're not gonna shoot up $100 in a day. It'll do that in a week. But like if Thursday it's at 700, sell out the money contract for 850. That's like free money.
Yeah, but that joint gonna be so low though. I tried to look at that joint on a Thursday to see how much it was. Man, that joint's it's not gonna be the same prices we see now.
Yeah, because there's less risk involved. That's why. But I'm saying, but it's guaranteed money.
Yeah,
so
$200. Yeah.
And that $200 is 1/3 of a share. So if you're doing that every week, it's better than a dividend. It's like a super dividend. And then you buy in more shares so you can write more contracts and you just snowball the money. But yeah, that's my high horse. That's all I've been contemplating last month. So
yeah, it's looking real attractive, man. I think I might hop on that.
No, but yeah, you wanna high IV and a dividend. Ideally, those are the two things I think really work for that strategy, because then you don't have to ever worry about selling it. You just keep your shares, get your dividend, collect your premiums, use the premium maybe to buy more shares.
All right. What we got next?
Y'all want to say that out of the money conversation for next week, so we can really dive into that.
Yeah, we already sitting at an hour, so we should probably.
Yeah.
Let's go to y'all picks. Y'all picks for the week.
Y'all go first.
Hey, you ain't had no picks last week, did you?
Yeah, I don't got no picks this week either.
This dude.
I ain't had time to do my research, man.
Shit, well, my pick of the week was going to be Smith & Wesson. But right before we went on, I Googled Joe Biden and gun restriction. And it took me straight to his website. And I read a whole bunch of stuff that he's trying to do with gun laws. So I'm going to wait until Smith & Wesson's earnings. When was it? Friday or Thursday?
I think it was Friday.
I mean, I went back and looked at the 10-year chart. Smith & Wesson did pretty well under Obama. In 2020 is when it kind of went down a little bit.
And you did a 10-year chart? Where you get that drink from?
Superior brokerage.
Where did I see that?
He's like, I looked at the 10-year chart at a real brokerage.
Got a nice little brokerage. Who you go with?
This TD, man.
I got that TD. They give you nice little options to go.
Yeah, but they actually got a 20-year chart.
Whew. I feel like everything goes up after 20 years. Like,
yeah, but Weston didn't go up after 5 years. That's ain't weak.
I think all them gun stocks only go up when there's a Democratic president, because they get sales off the fear that something's gonna happen to guns, and then nothing happens to the guns.
Hey, can I y'all want to see this real quick? Can I put my joint up there?
Yeah, share your joint.
Let me see. I think you have to approve it. Can y'all see it?
I don't
see nothing yet.
Or maybe I gotta close mine first. I try it again.
All right.
Oh, you know why this week it probably didn't have a lot of people probably didn't see the link. Oh yeah, because I did that schedule. Like it didn't come from me. Like I didn't post the link. I did that little scheduling thing.
Yeah, I just saw comments from like 10 minutes ago, so I feel like people just found it.
Yeah, so I ain't gonna do that scheduling joint no more, because it comes from the actual StreamYard joint.
And then they posted in the group.
Yeah, so you know what I'm saying. Yeah, well, people probably don't even see it because I didn't post it.
Yeah, our first comment came 15 minutes ago, so people probably didn't see it.
I ain't gonna do that scheduling joint no more.
Can y'all see that now?
Yeah.
Yeah.
You can't make it bigger. It's kind of small.
Oh, is it? That might do it. It went blank.
Nope, we're here.
That's as big as it's gonna go, fellas.
Yeah. Oh yeah, that joint. Say what's that? 2000 what?
So this 2008 right here. It's all about Obama right here. Then it starts to go up. Obama's last few years, and then Trump took over 2016, and then right when he took over, it starts to tank a little bit. But that last year, I guess when everybody start getting the jitterbugs, Smith & Wesson starts going up. Their target price is $23.67 by like 3 different websites. It's like TD, TP Ranks, and E-Trade. They all got it at $23.67.
I can see that, because if anything is included in the stimulus package about guns, it builds that hype. I got to go buy guns before they take them away.
Yeah, it's right now it's at $17.21.
No.
It beat earnings past 2 quarters, but I think that was COVID fear type stuff right there.
Mm-hmm.
So maybe in order after earnings if they don't do too well.
Man, you gonna buy out on that, Chad? Damn.
What'd you say?
So you gonna buy out on that?
I'm waiting for earnings, man. I'm not buying this shit before earnings. It's too much going on right now, dog.
Hey, what jump was you looking at? Like what was the option play you were looking at?
I think it was a $20 call, but that was right before I went on Joe Biden's website.
Oh, that ain't nothing but $100. April 16th. That's a good little. Yeah, that's a name. You know what I'm saying? That's a nice
jump. That's April. Yeah, April expiration.
Yeah, that's a nice little joint. I might just cop one. You know what I'm saying? See what they do.
Mm-hmm.
I mean, it's not oversold yet. Like, you might get a better price, a slightly better price. But what I'm looking at right now is kind of like on its way to being oversold, but it's not there yet.
So what's your screen, Rex?
I'm on my.
Oh, you're on your phone? Oh, okay.
I should start trading on my computer more, but I'm just so used to doing it on my phone.
Yeah, you can show it because you can see. I want to see the graph you're looking at.
Damn.
Is that the MACD?
I don't even know how to. Yeah. So it's the RSI, the MACD, the Stoke, and the those are the three. So the MACD is trending towards sold. Stoke, same thing, and then the RSI. We have it as if it's above 70, it's overbought, and if it's below 30, it's oversold. Right now, it's kind of like sitting at 42 and heading towards the 30. So it looks like he's right. It could shoot up from being oversold, but it's not necessarily at the best price it could be right now.
You got the chart up, Ed?
Hold
on, I'm gonna share mine real quick so you can see this chart.
Let me see if I can log into TradingView for sure.
Can y'all see that?
Yeah. Oh, yeah. This Webull? Oh, this E-Trade. Okay.
No, this is E-Trade.
All right. Yeah, that's your RSI right there, the white line.
Shit, my bad. Yep. Just the MACD.
Yeah. That's the MACD. And then look at it. You see the RSI? It's heading towards oversold, but it hasn't necessarily. That line is the oversold line. So it's heading there. It was there before. And then if you go back to when it hit the oversold line, you'll see it's the same time that the stock shot up. So that's the pattern you're trying to track or catch.
You talking about right here on 223?
Yep. You see it dropped, hit the oversold line, and then it went right back up. So that's what you're trying to catch.
Got you. Yeah, I'm gonna see how earnings affects them, and I might hop in on Friday if that dips anymore.
Oh, we had some comments in YouTube too. I didn't even notice that joint.
Yeah, man, you need an intern, man.
Man, got too much social medias.
Once you start a call, you have to mark as bequest. Okay.
Yeah.
So my other dark horse was FTI. So FTI. What'd you say, Ed?
Doctor said you don't know what you're talking about.
You remember Nestle from Blair? Nestle Clerks. Yeah. Your cousin had a question. He said, Chad, your cousin had a question.
What'd he say?
What does it mean when something is teetering?
That just means you want to think about something.
Oh, he talking about when I said he was teetering about getting in, actually getting in.
Okay.
Yeah.
What was your other call, Chad? Then you had another one or no?
Yeah, that was that FTI joint. So I got a little email from Tip Ranks with 2 companies on it that were looking good to recover from their dip in their stock price, and that was FTI and CXW. So I'm gonna hop in FTI sometime this week.
FTI and CXW, you said?
Yeah, CXW was that's that prison joint.
Oh, you think it's gonna bounce back? I still have my puts from when he first announced it, but I didn't really make no money off that.
For CXW?
Yeah.
Yeah, that Tip Ranks article said they got a really good chance of bounce back in 2021.
But I thought he was canceling. So how would they make money? Won't they shut down in 2021 when he ends all the private?
No, what happened was hold on, I'm gonna pull that email up real quick. But they changed to a they changed their the way they file to a not a 501(c)(3). Hold on, I'll tell you exactly what it was. CXW. They went from a right to a taxable C corporation. And when they did that, they caught a lot of bad publicity. And that's why their stock price dropped. Whoa, what happened? Would you about to pull it up, Ed?
No, I was looking at my joint.
And I have no idea what that taxable C corporation means.
That's a Kim question. I ain't gonna pretend to know.
I'm not even gonna try to touch that one.
No. All right, so CXW call. I guess I could hedge that up with my put. Let me see what their chart looking like.
But my main one was Smith & Wesson.
It's not oversold just yet, but it just had a sharp drop from being overbought.
Yeah.
All right, cool. And then my joint is just Apple, because historically it drops in February, bounces back in March, so hoping for that. But it is kind of oversold right now, so I don't know. I'm not hopping in first thing on Monday. I'm gonna kind of watch it because I want to see what this dividend news does, because they announced that they're going to increase their annual dividend, and that could motivate more people to buy more shares, right? But in the same sense, a dividend, when you're thinking about it from a stock market price, every point or every percent that a company puts towards its dividend is a percent not going towards future investments or research and development for that company. So big money could be turned off by the idea that they increased their dividend, while retail investors might go, okay, well, now I want to buy 100 shares of Apple because I'm going to get more money back at the end of the year. So I need to watch it. But as of now, a $125 call for March 5th on Apple is $100. So it's not that big of a risk. I'm looking at it, but again,
well, this Friday, you still doing those little short? Them things would be too risky.
Yeah. I'm try to do better, but I don't know.
You say you're doing a March 5th one?
It's March 5th. I mean, he's right though, because I was just looking at what was cheap, but you could push it out. Let me see what it.
What strike price was you looking at?
125. March 5th is $1, or is $1, so you're paying $100 for the premium. Yeah. And it's currently trading at 123. But I really just want to see what happens on Monday, because again, big money could go, I don't like this. That's affecting my long-term investment, my long-term $1 billion investment, because now more money is going to the real retail investor. But at the same time, we've seen with all the stock splits this year, if it drives more retail investors to it, it could also push the price up. So I think it'll be important to watch volume and just take a look at the chart.
Something because I'm in an April call.
I think April will be fine because February is almost behind us. So historically, all the bad stuff that was supposed to happen has happened. So
yeah, that's the one I got into last week on last week's Zoom. StreamYard.
Yeah, but that's it for me.
Oops. Ed pumped out on us again, huh?
No. The gentleman I'm going with is the MJ, the greatest MJ. That's a ETF. That's a weed ETF.
Mm-hmm.
They got all the, all the top 10 marijuana companies. All in one.
Do they have better ones than the one Jay-Z is attached to? I think
only Jay-Z's joint is an ETF.
Yeah, Graham F. Oh, you going with a straight company right there?
No. MJ is the ETF, so it has like 10 different companies. All under.
Do they have options? Because
yeah, they got options.
I think I'd want a weed ETF long term. Because somebody got to win. I don't know who. But.
Yeah, everything down this week, but that joint MJ, I was at 100. I was at 100% 2 weeks ago before this red week. So that joint, you know what I'm saying? But yeah, I think it's gonna go back up. My option don't expire till April. I'm trying to show you the companies that they have. What's that one called with an A, Althea or something like that?
Aurora.
Oh, ACB.
No, the one that's what's the two that's supposed to be merging?
Tilray.
Yeah. Okay. Yeah. Here's the one I'm talking about. Alpha. They got Alpha. It's 10%. GW, Tilray, Grow Generation.
Oh, I didn't know Hexo was a weed company.
I didn't either. Yeah, but they got everything all in one. Bam.
Yeah, I'm gonna have to compare those to the ones that Graham F has.
The who?
Graham F. That's the one Jay-Z is attached to.
Is that and that's an ETF?
I believe so, Ed.
It's called, what is it called? Grand F?
Graham, GRAMF.
Yeah, I saw that. It was in the news this week, right? Wasn't it something in the news?
The week before that. That's an OTC joint.
Yeah,
that's a holding court.
Yeah, because they about to merge. So they basically about to merge. Oh yeah, that might be some potential on that joint. How much is that joint? Ain't nothing but $10. They probably don't even do options, do they?
Nah, I don't think so, Ed.
Yeah, I think they probably. Yeah. Whoa. Y'all got anything else?
No, that's it. I think we should start trying to aim for an hour. So
yeah,
good.
Get up.
We had an hour 12.
Was?
Yeah.
No, we started about 9:30.
Yeah, it's hour 12, 10:40.
Ed can't get the damn link up.
We had to wait for Rex. Yeah, I'm gonna blame Rex on this one.
You gonna blame me? Hey, look, people gonna watch this recording and be like, Ed was tripping for 30 minutes. Who shares all that?
Ed, go on Fiverr and get you an intern, man.
Yeah, I'm going to put an ad right now. I'm going to find somebody from the Philippines. I'm going to get somebody from the Philippines.
Stupid joke.
Good gracious.
All right, man. I'll talk to you next week.
All right, Facebook. Y'all have a good trading week, man.
Yeah.